Welcome to How to Make Money in Stocks with Investors Business Daily, featuring market commentator and host of the IBD Market Wrap, Amy Smith, and Matthew Galgani, host of the IBD Stock Analysis and editor of the IBD Extra newsletter. Tune in each week as we use history, not hunches, to help you stay safe in today's market and get in early on tomorrow's winning stocks. Now, here's Matthew Galgani.
Welcome, everyone, to another episode of How to Make Money in Stocks with Investors Business Daily. We have Amy back from the Midwest on your trip to Cincinnati, Ohio.
And you know what? The people, Matt, were so friendly and nice in the town. It's close to my home in West Virginia. This is a slightly bigger town, but it's not too big because the people are still friendly, but it's big enough. Anyway, I met so many nice people. One was Jim Manthe. Now, I had met him at the Level 2 workshop in Atlanta. But he's originally from Cincinnati, so when he knew that I was going to be there, he emailed me about this Grater's ice cream, and he said, you got to go try it. So I went to the town square, and I had the black raspberry chocolate chip, which is one of their classic flavors. And then the first night that I was in this little town square, they had salsa music, and tons of people were out there dancing. The second night, they had swing music, so it was fun. It was great weather and everything. But then he did something really super sweet. He sent me an entire case of ice cream.
Wow.
So I have salted caramel, I have Madagascar vanilla bean, I have bananas Foster gelato, I have strawberry chocolate chip, and I'm telling you, it is delicious. Jim, thank you so much. That was very sweet.
Didn't he say you were supposed to share that?
Oh. Oops. You were out, Matt. You were out earlier in the week. I took it home.
All right.
It would have melted if I'd kept it here in the office.
I think we have a freezer in the office. But
I'll bring you back
we'll let
one.
you go on that
I'll
one.
bring you back one. Okay. Then I met this lovely homeschool mom. She has two young children, 9 and 11, and they've read my book. They're learning about the market, and I was so humbled and thrilled about that. I'm just so excited that there's young people learning. Also, I met Ross Haber, who is a former portfolio manager for Bill. He's now a partner with a guy in Cincinnati, managing money. And the partner's young son was also there. So I just got such a thrill out of young people really starting into investing. So it was a great week.
That is really inspiring because if you want to start young, as we all know, compound interest, compounding your gains is such a great part of investing. Now, we did have a follow-through day this week, which kicked off potentially a new uptrend. But at some point, we will enter into a bear market. So on this week's show, we want to ask the question, when a bear market hits, will you be prepared?
But first, let's take a look at the market. Well, Matt, we had a follow-through day this week, and we also had the S&P moving into a new high ground. That's new closing high. People were a little confused because the S&P actually hit another previous high, but this was the closing high on the S&P. So we are in an uptrend, and now's a time to be looking for stocks to buy. But as Paul Whitfield said in the big picture column, you don't have to jump all in just because we had a follow-through day. Try a few positions, see if they're working. If they are working, go in a little bit deeper.
And if you look at the IBD 50 stocks, there are a number of leaders that are setting up in bases. So potentially, if this new uptrend gains traction, these stocks may break out and possibly lead to some good gains. But you can't ignore what we've been seeing in the market up until now. It's been a real roller coaster ride that may very well continue. We do know that some follow-through days do not work, and the markets roll right back into a correction. That may happen here, it may not. But one of the things you want to keep a close eye on is distribution days. If you get distribution days, which are days of heavy institutional selling on the indexes, if you get those kind of days very quickly after a follow-through day, it often spells trouble for the new uptrend.
And I want to give a plug for Matt's videos and my videos. I do the Market Wrap video Monday, Tuesday, and Wednesday. Now, not every week is going to offer the opportunities that I had this week, and Matt and I are going to be wrong, but we can help you build a watch list. Let me give you an example. This week in the Market Wrap video, I profiled CalMaine, Cheetah Mobile, Zebra Technologies, and Bojangles. Well, CalMaine, the ticker symbol CALM, was up 14% for the week as I showed the breakout. Cheetah Mobile was up 23% for the week from when I had it in the video. Zebra Technologies was up about 6%, and Bojangles was up about 6%, even though it's still working on an IPO base. So look at these stocks. We're looking for all the great fundamentals and technicals that we talk about and the huge spikes in volume. And Matt does some fantastic videos also.
Thank you. And just to be clear, the point of this is not to give you a recommendation and say, hey, or go out and buy this stock. It's to point out what is going on with the stock that is healthy, what are some potential warning signs or yellow flags, and then if all of the pieces come together and the market is good and the stock breaks out on good volume, then potentially that's an opportunity to get in. But like Paul Whitfield said earlier, you don't just go whole hog all in at once. Get in gradually. If it's working, you can add to those positions.
But here's a good indication whether the market is strong or not. If you see that Matt's stocks that he's profiled in his videos are doing well, that's an indication probably that the overall market is doing well. And I would say that this past week obviously did show that we have some growth stocks that are working. If you get Cheetah Mobile with a 23% gain, that just shows you there are little pockets of the market that are working.
So as we said, we have started a new uptrend, but you want to keep a close eye on the market to see if leading stocks are doing well and if the indexes are able to add to those gains. So be sure to check in on the big picture each day going forward.
Imagine a Sunday morning, coffee in hand, you turn on your laptop or tablet and you see a handful of stocks near a potential buying range. That's what you get with Leaderboard from IBD, a timely watch list put together by our market experts, and it's updated throughout the week with alerts to any buy or sell signals. The results? In 2013, Leaderboard has more than tripled the performance of the S&P 500. So to see what's on the list right now, get a free trial of Leaderboard at investors.com/radio show. That's investors.com/radio show. Welcome back to How to Make Money in Stocks with Investors Business Daily, featuring market commentator and host of the IBD Market Wrap, Amy Smith, and Matthew Galgani, host of the Daily Stock Analysis and editor of the IBD Extra newsletter.
So on this week's show, given the current market that we're in and the stage of the cycle that we're in, we want to ask a simple question. Are you prepared for a bear market if we get one? And we don't know when we will. We don't know how deep it will be when we do have one, but we know historically that you have to have bear markets. That's the whole cycle. You have bull markets followed by bear markets, and then the new bull starts again. Now, the key is to make sure that you're prepared for that bear market when it happens. But one point we want to emphasize throughout this show is that it's not an either or. It's not an all in or all out scenario. And if you wait until it's official that we've had a 20% plus decline in the major indexes and therefore it's officially a bear market, by that point, if you haven't taken some defensive action, you're probably in a lot of trouble. So one thing we want to emphasize is that in order to prepare for a correction, you have to be following an incremental out strategy where as trouble brews and starts to emerge, you start to protect yourself. You don't wait for it to completely fall apart.
Well, let's back up just a second and let's talk about an intermediate correction versus a bear market correction. An intermediate correction typically is one that is 8 to 10% in depth, okay? A bear market would be 20% or more. Now, what we've had little teeny tiny little pullbacks too, and a pullback can be 5%, which is hardly any correction at all. I think one thing that is important to keep in mind, and something that I talked about in Cincinnati at the Leaderboard Summit, is the level of being flexible. Okay, you never want to get locked into a rigid outlook, because sometimes if you get too locked into that, your conviction is too high. You're too married to the idea that we're going into a bear market, or you're too married to the idea that we're going to continue to go up. And Jesse Livermore said, he didn't like the term. He said, I am neither bullish nor bearish, because that gives me a mindset. I think we need to stay nimble and flexible. One thing we've talked about a lot when we're talking about what do you look for at the top, you're looking for distribution days clustered in a very short period of time, and that is your most reliable warning that the market is running into trouble. Now, let me also say that we've had that, Matt. We've had distribution days, and then we correct. And it seems like we're going into a correction, and then we turn around and the indexes go back above the 50-day again, and then we go into a new high, and we kind of keep bouncing around in this range.
And of course, the elephant in the room is the Fed, with the stimulus over several years, plus interest rates, and now stimulus in Europe and elsewhere. So that is one reason we've had a very unusually long bull market cycle. And we talked about this on an earlier show. But take a look at a monthly chart for the NASDAQ, because this puts in perspective where we're at right now. And if you look at from October 2002, when basically a new bull cycle began, through October 2007, when we had the financial crisis, the NASDAQ rose about 158% bottom to top. Then it pulled back, and of course we all remember the financial crisis of 2008. But in 2009, in March, we began the current bull cycle, which has run until now. That's 6 years and then some. That is a very long cycle. And during that period, the NASDAQ has gained about 300%. So that's nearly double the big gain that it made in the 2002 to 2007 bull market cycle. So at that point, just looking at that, you know that at some point you're going to have a correction to wipe the slate clean, bring in some new names, bring in some new innovations and trends that drive another bull cycle.
Now that's exactly the problem, Matt. You said new names. When we did have the last real meaningful correction, it was in 2011, and we did correct 20%. To be honest with you, it was 19.62%, not quite 20% by the close of the day. I think it was down 20% for less than 5 minutes, and then we came off the bottom. The reason it's questionable as to whether we had a bear market then is we did not have leaders really go by the wayside and then a whole brand new set of leaders come forth. We still had the same names that we've been talking about. But since that time, since 2011, we had a bottom on the NASDAQ of 2298, and now we're currently around 5,000. We've way more than doubled, okay? And that's a tremendous run, even if you look at it on the chart without many meaningful pullbacks. But let's take a look at what we've had here. So in 2011, we had that high, we had the pullback. Then we go to March 2012. We had a 13% pullback. That was an intermediate correction. In September of that same year, we had a 12% correction. In March 2014, we had another 9% correction. And in September, we had a 10% correction. Now, come to this year. In March, we had a 4% pullback, very shallow. And then in April, we had another 4% pullback. So you can see the difference. We actually had a couple of intermediate corrections there in 2012 and in 2014. That was very healthy for the market. This year, we are not seeing a real pullback. At some point, of course, we will. What we're trying to do is to put into context where we are right now.
And we're certainly in a roller coaster market, as we've said multiple times. There's a lot of seesaw action where right when you think, okay, the NASDAQ, it just plunged through the 50-day. This is where we might see that more steep correction that could constitute a bear market at some point. And then over the next day or two, it bounces right back, gets back above the 50, gets over 5,000 again. It's been just that roller coaster ride. Makes it very hard to make money, makes it very hard to see which direction the market is really going in. And by the way, in the next segment, we're going to talk about some specific steps that you can take to handle a market as it begins to weaken so that you're not caught off guard when we eventually do slip into a bear market.
Matt, I think there's something very useful here that our friends at MarketSmith posted. It's sort of like a blog post. And these are free. If you go to marketsmith.com, you can view these without being a subscriber. Investing is a marathon, not a sprint. And I want you to think about this right now. The goal of investing is to make money. Right now, our day-to-day job is to manage our risk, and we need to preserve our capital during tough periods of time. That way we stick around until we have a really great cycle and we live to trade another day.
And always understand that, as we said earlier, it's not an all or nothing proposition. You're not necessarily going to be all in to either a stock or your entire portfolio, or all out of your individual stocks, or all together. There's not this grand signal that, okay, now a bear market is beginning. The only true official signal that we have for that is when you're down at least 20% in one of the indexes. But again, by the time that happens, your stocks have probably sold off sharply. Many of the leaders will certainly have sold off sharply at that point. So the strategy should be to incrementally ease out as you start to see trouble in your stocks, in the indexes, and in the leading stocks in general. And that's what we're going to get into in the next segment. Some of the steps you can take to make sure that you're proactively taking defensive action as the market potentially rolls over into a bear market.
So what are we going to look for if we get a meaningful correction? Well, you're going to see a decisive break below the 50-day on the NASDAQ and on the S&P, and you're going to see those indexes living beneath that line. What we've had recently is the tiptoe through the tulips version of breaking through the 50-day.
Right.
We sort of tiptoe below it, and then we peek back up above it, we tiptoe below it. We haven't really seen that decisive break, and when you see it, we'll talk about it on the show most definitely. You're really just going to see at some point, wham! You're going to see a break, and you're going to see the indexes really rolling over. We could be in the early stages of that. We are not going to predict. Again, we're going to stay nimble and open-minded. All we know is we've had a very unforgiving earnings season, and so some of the leaders really have done that break, which we were looking for. You're looking for stocks in the IBD 50, your weekly review, the sector leaders. You're looking for them to start to make a break. And during that time period, they may form new price consolidations because most of the bases are formed when we have a correction. So that would be a good thing. If you begin to see the sector leaders and say the top 10 in the IBD 50 starting to form price consolidations, that's okay. That would be a good thing.
So if you're trying to figure out what you personally should be doing with your stocks and with your overall portfolio, obviously there are countless indicators that you can be looking at, from headlines to the price and volume action in the indexes to leading stocks to your own portfolio. But one of the main things to look at is simply your own portfolio. How are your stocks doing? Have you been getting sliced and diced recently with these breakouts that have failed? Are you generally sitting on nice profits in stocks that are still trading well, still showing a strong relative strength line and good tight trading? Or are you maybe at just break even or maybe sitting on a small loss? That's going to tell you a lot about how you're personally doing in relationship to this current market. So that really is the first thing that you want to pay a lot of attention to. How are you doing right now? If you're not sitting on a big gain, you have to be much more proactive in taking defensive action if stuff goes against you. Obviously, like Amy said, you're also looking at the overall market. How are the indexes doing? Do we have a lot of distribution days on the count, which you can see in the big picture each day in Investors Business Daily? And then how are leading stocks in general doing? So if you think about that, kind of the last thing that you're really looking at is the latest news and the latest headlines. There's a lot of speculation out there about what the Fed will do, what they won't do, what bonds will do, what the oil market will do, all these different things. But first and foremost, look at your own positions. How are you doing? And if you're not doing very well and everything is shaky right now, maybe some defensive action is in order.
Okay, one thing, don't get discouraged if we get into a pullback, because every year, typically, we've had some years where there were some exceptions, but typically there are tradable rallies. Remember, even in the worst of bear markets from 2000 to 2003 was a brutal one. I remember it. I sat through it. I remember exactly what that was like. But there were tradable rallies, which means you always do need to stay in touch with what the market's doing. Don't check out because you can miss the train.
So that is a very important point. Even if you're in a bear market officially, you don't want to walk away from the market because you could miss that train when it starts again. And as we've said a million times, the big money is made by getting into stocks at the beginning of a new uptrend. But we haven't had that wipe the slate clean type of correction at this point. But I want to go back to one point about when we're in the situation that we're in now, where we're not sure which way the market could possibly go, and you're paying very close attention to your own stocks. Let's say that the indexes do start to sell off more sharply, and a lot of leading stocks start to fall apart. But the stocks that you personally own are hanging in there. They're doing well. Now, you have to understand that 3 out of 4 stocks will eventually go in the same direction as the overall market. But it may take a while. It may take a couple of weeks. It may take several weeks, maybe even a couple of months. But typically, when you really go into a sharp bear market like we did in 2007, 2008, then eventually it will take most stocks down with it. So even if you're sitting on stocks that are doing well, make sure you have a plan. what is your exit strategy? What is your worst case scenario? If the stock does this or falls to this price, then you're going to lock in your gains. Have that in place. Don't think that, hey, I'm the smartest guy in the world. I picked the few stocks that aren't falling apart, so I'm just going to sit tight. At some point, you probably will give back a significant portion of those profits. So think ahead of time. Have a plan for where you're going to lock in the profits that you have.
Okay, now what brings us out of a bear market, or what brings us out of even an intermediate correction, which is about 10%? Well, we have earnings, and they come about 4 times a year. And remember that a strong quarter of earnings can turn the market around. So what we want to pay attention to is, where is the smart money going? Is the money going into bonds? That's more of a fear play. Mm-hmm. Is the money going into the stock market? That is a confidence play. That is a risk-on strategy. So just pay attention. You will see this very obviously in the indexes. You're going to see it in leading stocks. Right now, we're in what we call this lovely, charming sideways market. And we've been sideways, and that's a difficult one to play. In fact, to be honest with you, Matt, it is the most difficult one. Mm-hmm. If we get into a bear market, we are all going to breathe such a sigh of relief. If we see the market really correct, folks, that is an exciting time, because we've been doing this long enough to know on the other side of that bear comes a roaring lion, and you get these new stocks. We're going to get the Green Mountain Coffee Roasters and the Pricelines that make 1,000% gains. We're going to get the Chipotles and the Lululemons and all those stocks that made incredible runs, the Netflixes, the Baidus. That will be a terrific time. So don't fear the correction. Look forward to it. Having said all of that, Matt, maybe we are not going to get a severe bear.
Maybe not.
We may get a little pullback, and we've got a lot of quantitative easing coming out of Europe. Maybe we'll get a shallow correction. It's very difficult to see what's going to happen.
It definitely is. It's impossible to know what is going to happen. But again, that's why you have a plan for each of your stocks, and you incrementally get out if trouble starts to emerge. I want to add to what Amy was just saying about how when we do have a big bear market, then new names emerge and a bull market will come about, and it will typically lead to some very impressive gains. The trick to benefiting from that, though, is to handle the peak well, the prior peak where the uptrend ended and it started to weaken and we went into a bear market. That is a very crucial time, because you want to make sure that you lock in the bulk of the profits, or at least the remaining profits that you had if you held out a little bit too long, or certainly cut short any serious losses. Follow that 7 to 8% sell rule as a maximum possible loss, because if you do that when the market rolls over, you will protect your portfolio and have cash to invest when eventually a new bull market begins. So you're not digging out of a hole that you created by holding onto your stocks too long, but you're sitting on a nice pile of cash that now you can invest wisely when a new uptrend begins. That's how you make money in the market. If you're constantly on that roller coaster where you make big money in a bull market, you give it all back and then some in a bear market, and then you start the cycle over again in the next bull, that is not a way to make money. It's also a way to go crazy, because it'll drive you nuts doing that. So take more proactive measures and make sure you protect yourself as the market heads down, and then get back in, again, gradually, incrementally, when signs of a new bull market or a new uptrend begin.
When you start investing, it's critical to have a game plan for success and a simple routine that fits your schedule. With Investors Business Daily, you get both. The Market Pulse shows you the right time to buy or move to the sidelines. Unique lists like the IBD 50 highlight stocks that could be on the verge of a big move. And IBD Stock Checkup gives you pass or fail ratings for any stock before you buy. Get a free trial at investors.com/radio show. That's investors.com/radio show.
Now, the final segment of How to Make Money in Stocks with Investors Business Daily market commentator Amy Smith and Matthew Galgani, editor of the IBD Extra newsletter.
Okay, everybody, keep your watch list up to date. Read through the paper, see stocks that are maybe nearing a buy point, and be sure to check out the videos that both Matt and I do on investors.com under the IBD TV tab.
And we also want to let you know that next week we have a special report on financial advisors coming out that you want to be sure to check out. And as always, we have show notes for this week's episode on our website at investors.com/investing show.
Okay, see you next week, everybody.
You've been listening to How to Make Money in Stocks with Investors Business Daily, featuring Amy Smith and Matt Galgani. For more stock ideas and investing strategies, and to subscribe to the free podcast of this show, log on to investors.com/radio show. That's investors.com/radio show.